Good morning, afternoon, or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, on this wonderful Wednesday for another jam-packed daily cryptocurrency market update. As always, if you are new around here and finding yourself on my channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. That's exactly what we're going to be doing in this video. We've got some really interesting data for the broader markets coming out towards the end of the week, and we are going to be covering that in regards to PCEs on Friday and GDPs for the US tomorrow, certainly for the last quarter. We're also talking about the broader markets, going to be revisiting our theory on the bond market. So we haven't been in the ding-dong buy bonds where diamonds camp. We've said, no, not the case, not going to be the case. And you've seen since then this real divergence between bonds and risk, which typically move together. We'll explain a little bit of the theory behind that when we look at that towards the end of the video. But I think that the bond market is going to get a bid, which begs the question, well, who's going to be buying bonds at a time when the Fed is certainly telegraphing that they're not anytime soon, they're not cutting rates yet. And really what we've seen is a leaning on risk as a result of the implied rate adjustment. We'll talk about that as well. But who's going to be buying bonds? So why are we bullish on bonds? Well, it's because of technically what we're seeing. We think the bond market is bottomed and actually people are accumulating bonds ready for essentially the Fed to step back in. And just yesterday, you had the official announcement of the Treasuries for the first time in US Treasury, for the first time in 20 years, actually stepping back in and doing a bond buyback program. Now, this, of course, is to strengthen the bond market, which they can't allow to fail because bonds are the fiat system. Money is debted into existence. This is the whole reason Bitcoin exists, because it's a total Ponzi scheme. All money is an IOU. You get the money to go and buy your house, and there's a liability on the back end of that in the form of debt. This is how money works, and they need to support that. And soon, because there's a real divergence showing up, certainly between gold and the bond market, which typically moves together, and so on and so forth. So we are gonna look at all that towards the end of the video. The implications of this for the cryptocurrency space is its liquidity at the end of the day, and we can show you that. We're going to overlay the TLT, or we're going to put the TLT chart up and overlay risk. The reason being is because as they proliferate, they've got to buy more and more. The system gets bigger and bigger, i.e. the US dollar devalues and risk goes with it, if that makes sense. If you look at M2 and things like that, you can see that very apparent. But let's start things off with the crypto space. We've got news about an Ethereum ETF and all kinds of things to cover. These really are jam-packed updates. I want to start things off with a nice, clean Bitcoin chart. And the reason I bring this up is because not that long ago, not even a couple of weeks ago now, there was real panic in the markets. And we made sure to come out and kind of be a steady hand in what was not a smooth sea at the time, given all the headlines and things like that that were circulating. And this is why we're technical analysts, because we focus on the charts and we let them be our way of navigating things. This is a very healthy chart. This is in a clear uptrend. You've got this amazing fundamental narrative behind Bitcoin in regards to the halvening that's just happened, in regards to the ETFs. We did have news in regards to ETFs, actually. Eric Balanchunas, great guy to follow, reporting that we have a new high watermark for investing into Bitcoin ETFs. Two different advisors each put $20 million to FBTC, so Fidelity's product. One is from Kansas and the other is from Minnesota. The percentage of their portfolio is also pretty high at 6%. We are still yet to see, and this is the fundamental narrative that's going to drive and has been driving this bull market, asset managers allocate to Bitcoin. And why would they do that? Well, because it benefits a portfolio to be diversified. And certainly if you look at Bitcoin in relation to other assets, it's been the best performing one. And I think that has a lot to do with, of course, speculation, but more so the reason that Bitcoin was created for, which is the proliferation of the fiat systems. It was created as a lifeboat from that. Yes, we've moved into, I think the vast majority of people don't really pay too much attention to that. They just want to see the numbers go up. But Bitcoin has been nothing short of a success. It makes me very skeptical on the origins of it. We will be doing a video on that NSA paper in regards to a digital mint. But generally, the Bitcoin chart looks fantastic. This is a bull market by all accounts. We are still zealously watching TLT. Not TLT, sorry. The Total 2. Which we do think is going to put in some sort of a right shoulder and see the market get to around about a $3.7 trillion market cap, which is over a 3.7x from where we currently are, which is going to see certain altcoins do very well. And hopefully, fingers crossed, we picked the right ones. Yesterday, you actually had news. So this was published on April the 23rd, 2024. This is from the SEC's official website. And this is in regards to another Ethereum ETF. There's lots of Ethereum ETF filings. This is Franklin Temple's Ethereum ETF Trust. And the sort of comments that they made here is the commission finds it appropriate to designate a longer period within which to take action on the proposed rule change so that it is sufficient time to consider the proposal rule change and the issues raised therein. Accordingly, the commission essentially delays it, is what they're saying. Shall either approve or disapprove, so on and so forth. So it's just another setback. I don't think anybody was too hung up on Ethereum being approved or Ethereum ETF being approved kind of instantly. It's going through the same rigmaroles that Bitcoin is. Remember, BlackRock have also filed for one. I think if you look at ETH BTC and ETH dominance, both of these charts are kind of pointing in the same direction, which leads me to believe an Ethereum ETF is going to be approved. There's going to be the same sort of hype that we see and have seen around Bitcoin for Ethereum. Not in regards to the same volumes of money, but in regards to the kind of story behind it. And I think this is going to gain ground against the entire market. We haven't even really seen an alt season yet, ladies and gentlemen. That is still absolutely to come. So just a little bit of interesting news, sort of leading on from generally the cryptocurrency market is, in my opinion, in very, very good health. On to what's coming at the end of the week. Now, we have covered this. So today, you've got retail sales and, durable good orders, stuff like that. But really for me, GDP tomorrow is going to be an interesting one, Q on Q. We're getting really good data, certainly better than expected. Contrary to the belief of TikTok. And then actually on Friday, we've got core PCE. So right now there's been a leaning on risk, and I'll actually show this. Due to a strong dollar, which has been propagated by implied interest rates being priced out the market. Okay, market's forward-looking. We went into the year with 7 cuts, then 3, and now there's on the table of no cuts. There's uncertainty in regards to that. And this has been on the back end of inflation, not downtrending in the same manner that it has. It's going sideways. Sideways and up, by the way. And actually, yes, oil, if you look at oil overlaid with the Dixie, they move together. Oil is one barometer, yes, the largest for inflation, or one of the largest factors. Generally, I don't think inflation is an issue. I think it's just a bump in the road that we'll overcome. But there is a leaning on risk, regardless of the news headlines. Bitcoin is the highest beta of risk. If you overlay Bitcoin with the, I'll do it for you now, QQQ3, which is Wisdom Tree's 3x leverage trade. Beautifully bouncing around that 30 weekly moving average, by the way. Let me put this on log. These move together. So Bitcoin really is just a higher beta risk play, and it will overperform and underperform. Overperform when it's going up, underperform when it's going down. But it's very tethered to this, and you've had a leaning on risk, really on the back end of a strong dollar. So you can see the adverse correlation here. Strong dollar because of the inflation fears. Is this now the trend, or is this just a bump in the road? My argument is this is a bump in the road. We're not in the higher interest rate camp. And I think there's a reversion of what the broader trend is. We still are bearish on the dollar. And to move forwards and look at TLT and what the Treasury announced yesterday and where we think a lot of liquidity comes, which aligns with the liquidity cycle, it aligns with the technical targets that we have. Before we do that, to finish on the PCEs I think are going to paint a less bleak picture than CPIs, which could see the markets doing well. So Friday is really something I'm interested in. You could see the dollar sort of roll a little bit. Interest rates perhaps get priced back in or certainly not priced out as zealously as they have been. So big day coming on Friday. I want to move on to sort of really more broad macro stuff, and crypto is now part of that. We've shown you that with Q3. Lots of earnings going on as well today and this week. So much we can cram in these market updates. We are going to start doing live streams where we can spend an hour or so going over all this. Right now, we're kind of cramming it into a 10 to 15 minute video. But just the other day, so we think we're in a bull market. There has to be a macro reasoning behind that. Crypto isn't going to fly on its own if the rest of the market's wings are clipped, okay? I think the dollar is going to come down on the back end of continued proliferation of what the dollar is backed by debt at a snowballing pace, and actually the giving up of the Fed basically, or not the giving up, the submitting of the Fed to the bond market. So this was yesterday as well. This came out late for me, 8 p.m. UK time. The US Treasury is about to make a move designed to make the bond market more resilient. So The first Treasury buyback program in more than 20 years is scheduled to be reintroduced next week. A long-awaited program intended to make the Treasury market more liquid and resilient is expected to get off the ground in a matter of days. We'll explain why this is significant and what the crossover for crypto is in just a second. It is known as a buyback program and is scheduled to be reintroduced next week for the first time in more than 20 years. The US Treasury has already conducted limited buyback tests this month and indicated that it will announce the date of its first regular operation as part of next Wednesday's quarterly refunding announcement. The goal of the program is to support liquidity in the world's largest market for government securities. Concerns about the US's growing debt pile is being seen by traders and strategists as one of the biggest catalysts for a prolonged period of volatility inside the $27.5 trillion market. Extraordinary US government debt means prolonged bond market volatility. So what are they talking about volatility? So what we have here, so we have been speculating, let's just take these charts off for the time being, that the bond market was going to get a bid, okay? This lines with the liquidity cycle. The bond market hasn't been getting a bid at the moment because the Fed hasn't been buying it. There's been a lot of bonds issued. The Fed just hasn't been stepping in and buying them, other than Silicon Valley Bank and when they've needed to. Similar thing in the UK with the gilts market. We're really getting into things here, guys, in regards to the macro and how it aligns with what we're looking at for crypto. And we've already kind of clarified how crypto is a part of the macro. If you overlay it, QQQ3, it's a high beta mover. So we speculate. We haven't been in the buy bonds where diamonds ding dong camp. That's not been us. We've not been long bonds. But we have, from a point of down here when we notice this bullish divergence and all of this volume, so the bond market's likely to bottom here and make a move to the upside, which means yields are going to come down. It means the dollar's going to come down. Why would that be the case when the Fed have telegraphed that they're not going to buy diamonds? Okay, they're not going to buy bonds. It's because they are going to. And the reason they are going to is because the US, I say we are, I'm in the UK, but we the people, they're spending money and issuing new debt like it's going out of fashion. And the debt that's needed, or the money that's needed to just pay off the debt, is colossal. It's a snowball at this point. Now, how a lot of this debt has been getting financed is through the reverse repo. This is where they up the debt ceiling, which everyone was saying, oh no, this is going to cause a crash like it did in the reverse repo crisis that took place that led into, obviously, March 2020's events. We're not going to go there. Up the debt ceiling, and then they've been issuing debt, and they've been financing that debt through the reverse repo. This is getting absolutely, it's gone from 2.4 trillion, just to give you an idea of how much they're spending back, this is less than a year. They've drained $2 trillion from it. This will be getting down here in no time at all. So where are they going to buy the bonds from? Which is why I think the Fed's full of BS, which is what gold's sniffing out. Well, the Fed's going to be buying this and stepping back in, without a shadow of a doubt, which is going to mean further proliferation. It's going to mean liquidity for the markets, and bonds going up is actually a really good thing. This is the correlation between bonds and risk generally, and we're defining risk in this case by Bitcoin, the SPY, and gold. There's been a real divergence that's shown up recently. Why is that? Well, the Fed hasn't been adding liquidity because bonds have been going down, but the Treasury has been through other means. And we've shown you that chart where the kind of QE or stealth QE, whatever you want to call it, that Janet Yellen's been doing, has masked a lot of the QT that's been taking place. They've still been stimulating the economy. You're going to have that stimulation continue, and now the Fed step in and that added liquidity, which lines with global liquidity cycles, the Bitcoin 4-year cycle theory. As much as I'm not a fan of Raoul as a trader, I think actually he's got that kind of global macro thesis that he has, the everything cycle. I can see merit in it for sure. And this is how we get there. And this is how the bull market continues, not just for Bitcoin, which is the highest beta player of it and is going to outperform, but for risk generally. And this is why technically we're getting signals. And the Treasury is essentially saying, yeah, we're going to start buying back. They're going to need to. Where they're going to fund that from? Well, they can do it from the reverse repo for a while, but the Fed will need to step back into this market. So we're bullish on bonds, which means we're bearish on the dollar. That's kind of meaning of liquidity is forthcoming. Risk isn't going to do well in a dollar down. Is going to do well in a dollar down environment. So heavy macro covering towards the end there. But this is the kind of theory that we have in regards to how this market progresses forward. It has to be, because we know the correlation, unless there's something, how well would Bitcoin do in a dollar collapse? Well, you could argue it would potentially do quite well. But generally, in this kind of an environment that we're in, which isn't that, there has to be a backing that sees not just Bitcoin do well, but risk do well generally, and the anti-risk not do well. So the bond market is going to need to come up at some point. And we think that's on the back end of basically what the Treasury is already doing, and what's going to be amplified because the Fed is going to have to step back in. Now, whether they do that directly or not is still to be seen. So we'll see how this comes about, but they will be stepping back in, likely indirectly, which is going to be liquidity for things generally. It sees crypto's bull market play out, which aligns with the 4-year cycle theory. There's so much that aligns. But that's really all from me. I just thought this was interesting because the Treasury literally announced this just yesterday, or announced they were going to just yesterday. They've already been trialing various things, but this is huge. First time in 20 years. This is liquidity. It aligns up with our broader macro thesis of everything. And that's really all from me, guys. So keep the faith. We still think that this is a bull market. There's nothing to suggest otherwise until there is. And that's how this game goes. And then you can pivot. And things seem to be sort of getting a little bit back on track. So that's all from me. Have a wonderful Wednesday. I look forward to seeing you all in the next one. Thanks a lot for watching. See you in the next.